Now, our next conversation is going to dive into the 3 T's: trust, transformation, and technology. Because what happens when markets start to emulate crypto markets? They become 24/7, and without trust, we have nothing. Next up, please welcome to the stage Zhou for a fireside chat.
Okay, good morning, and thank you very much for the introduction. Now, it's a pleasure actually to sit here and have this fireside chat with Zhou, co-founder and CEO of Bybit. Now, today we're going to be discussing, well, Ben, obviously for years the industry has debated when crypto would finally integrate with global finance, and it's exciting times at the moment. Feels like a new paradigm shift. Creating the bedrock up, obviously, for the finance of the future with agentic payments, tokenization, and a plethora of other things. Now, in 2026, we are no longer waiting, we're building. Ben, can you describe this year and the years ahead? Do you think it's a transition into new financial platforms? Now, for the audience here in Paris, what does that actually mean in practice? Let's kind of start and paint the picture here. What separates that vision from what crypto exchanges have always claimed to be? What's changing now?
Yeah, I think if you look at crypto exchange scenes back in, I don't know, from 2014 to I would say 2018, 19, that's really the wild age where all the exchanges are here, there's no KYC. And I would say the first part of those landscape is very exchange focused, trading focused. So exchange, the predominant goal is a venue for people to trade tokens, meme coins, all of that. And I think since the last 3 years ago, compliance has become the main kind of focus. Even for Bybit, I think when you compete in the first stage one, you're really competing on how much you can ship, how fast and how efficient you can ship out your product, and you can gain users immediately. But I think for the last 3 years is how compliant, how fast can you get licensed. Now the reason you start to see even not only Bybit, a lot of the players, exchanges, even Revolut or eToro just now, it's becoming kind of the one-stop shop, right? It's because I think people start to see crypto as this technology, what it means. It means it's going to break a lot of barriers. It's going to connect what all of these inefficiency on geopolitical reasons where finance used to be segregated, but now with this magic internet money, everything can be connected. With this new trend, there will be a platform that becomes, or a few, that becomes the next JP Morgan that kind of connects everything. And for example, I'm here in Paris, I just meet the regulators, and I go around the world, meet a lot of regulators. The one thing they see crypto exchange now, today, especially Bybit, is our global distribution power. We have licensed almost every continent, many countries in the world, from Turkey to Brazil to Indonesia to Thailand to EU, we're licensed here. So when you have a good asset, such as a really good private banking product in France, in Paris, you really want to distribute it globally, then crypto has become that magic sauce. Because previously, you're really just facing maybe local or regional customers, where if people from Brazil wants to buy a good asset in France, but they couldn't get access to, then crypto and tokenization can really help that. So that's the new concept of the new financial platform. Is with the underlying technology, everything becomes 24/7 available. And even recently, we talk about pre-ICO from the US. I think people are getting crazy about that as well. So I think it's the connectivity, is the global, is the no barrier, is 24/7 is, right, yeah.
Well, you put it very eloquently. So that kind of lays the table for a few things that actually, you said a lot of different things there I'd like you to expand upon. Now, there seems to be a fierce competition. You mentioned there that there's probably only going to be a number of different of these all-in-one platforms. Do you feel like the legacy systems that have developed over centuries, actually, sometimes they're moving on weeks rather than the seconds that happen in the crypto space. Do you feel like they're equipped to handle these new innovations like stablecoins, agentic payments, tokenization of all different types of real-world assets? Or do you think that the incumbents of traditional finance, the big banks, the big institutions, are they looking at this now and thinking, hell, hang on, we are not equipped for this. We need to borrow or work with the innovators from the crypto space. Is that what you're feeling now?
The trend now is I think a lot of the TradFi players are trying to work with global international exchanges like Bybit. I think the recent news was ICE invest into OKX. We've been approached by a few partners. There's really a handful of global exchanges that, again, they see as global distribution channel. You have players that are very regionally strong. But I think even for NASDAQ, for New York Stock Exchange, in their head they are thinking, how do I compete with EU, for example? So if you take an example of tokenized stock, and the most compliant way we've seen so far is probably X stock, whereas the model is they take the asset from the US and they use the local EU framework to tokenize it, and then they find distribution partner like Binance and Bybit to distribute this stock. So the U.S. regulator and the exchanges are scratching their head. They're like, well, because EU is a step ahead on stock tokenization, RWAs, that's why people are using this route to distribute the U.S. asset, and they want to do it themselves. And the most recent news is even NASDAQ is considering 24/7 now, and also launching their own tokenized trading venues to compete. So you see not only exchanges are competing, but regulators and even countries are competing on that level. To go back to your question, I think it's a matter of time. I think everyone needs to evolve towards this new technology because in comparison, it's just faster, more efficient, and better. Yeah.
Yeah, I suppose if you're using sort of agentic payments these days via smart contracts deployed on blockchain rails, it's a little bit like, say in the 1990s, a company that still says, I don't want to use email. I think we're better off just sending normal parcels and more normal letters through the post. So you mentioned there very important distribution, right? Distribution is like everyone's eager to get in there. Can you unpack that a little bit? Do you think the legacy incumbents of traditional finance are looking at the crypto native companies and saying, well, they've got the demographic of the future. They're, as you said, have distribution setups across the globe. How are they working with the crypto innovators like Bybit? What's happening? Just explain the process and the relationships that you're building there with the incumbents from traditional finance.
So when we talk to them, I think the key word is infrastructure. So for exchanges like Bybit, we have close to more than 2,000 local banks connected. So if you go to Indonesia, we have local liquidity, local banks. You go to Brazil, you go to Nigeria, you go to Korea, it's the same. So that become very powerful because we have license in all these countries. When you have a good asset, like you want an RWA, let's see, a gold token or a T-bill token, whatever, and you want to distribute that into Brazil and these kind of channels, and that's when they talk to us. Okay. And interesting enough, you said when they look into crypto, a lot of times the partner we talk to, they don't want to get into crypto, but they want to use crypto to de-risk their portfolio management. I'll give you a very classic example. We are in Brazil, we're very big. I talked to a family office in Brazil, and they want to use Bybit to buy our RWA we help to sponsor with Standard Chartered Bank in Hong Kong. And I'm like, okay, why you want to do that? They said, well, with our current infrastructure, I can only buy gold, physical gold in Brazil. But I want to be able to buy gold in Hong Kong so I can de-risk my portfolio. At the same time, with the RWA that we offer, they can earn a yield. So why not give 5% allocation to this new thing? It's not even new for them, it's just gold. So they're using crypto, but they're not getting into crypto. So that's what crypto has become. It's no longer just Bitcoin, Ethereum, and these tokens. A lot of it is real-world asset, and this technology is already here. And actually, EU is quite advanced in that. Hong Kong is very advanced. What we've seen, of course, the U.S. With Clarity Act coming in. I think that's what's interesting. We don't need to sell crypto. We're selling real world stuff by doing this connectivity. Yeah.
Yeah, I suppose you're not selling crypto specifically, specific digital assets. You're selling the infrastructure, the architecture that's been developed. Uh, y- y- so, do you think crypto is still a toxic word amongst these TradFi incumbents? Like you mentioned there, they don't like the word crypto. They don't like the fact that they're getting involved in crypto, but they sure as hell like using the innovations from the crypto space. So, is that kind of what you're saying?
I mean, when we talk to TradFi guys, when you say crypto, they do think it's massively volatile. They do think it's, and a lot of the focus is stable coins, as how compliant we are, what are our licenses, how can we work with them. Since last year, we've been talking to so many of them, and I think the reason is because the regulatory framework has really become matured over the last 2 years. So EU is now fully regulating it, and all these new parts of the world. So when presented with them, that will pass their compliance. Once it's past compliance, then they want to explore, right? So even Bitcoin is something they will consider as well. Yeah.
Yeah, to diversify and de-risk their portfolios. Let's talk about compliance. Let's talk about the different jurisdictions. Comparatively, where would you rank them? Like Mika was kind of has developed and been quite progressive. The UAE is very progressive. Sorry, when it comes to its regulatory framework. We're still waiting to hear the outcome from the US. Where do you see like the strengths and weaknesses in the different regulatory jurisdictions around the globe?
I think EU is probably the top tier, quite advanced in tokenization. Especially tokenization, I think. And I think this plays in the strategy that EU wants to use crypto as a way for capital market, for getting the market more vibing, right? And I think that has been playing to the edge of for EU regulators. What I see is we're headquartered in UAE. We have the license, we have the IPA in Vara, and we're the first regulator from ESCA, which is the federal level from UAE. And UAE is interesting. They are testing things out in an economic zone, you would call it, VARA or ADGM, and then gradually they're implementing it into their federal level. So I would say they've been quite careful in the beginning, but now I think they're ready to really push hard on the overall crypto framework. And UAE has developed a reputation to welcome all of the crypto firms. So you do see pretty much all the influencers, crypto firms, trading firms are moving into UAE, right? US, I think obviously is the one pushing the boundaries with innovations and all of that. Our hope is Clarity Act I think that would mean a lot. When it comes, like we talked to Goldman, we talked to JP Morgan, one of the biggest challenge is they're on their own book, they cannot hold crypto because there's no clarity on what's the classification of Bitcoin or Ethereum. Is it a security, is it not? But the moment Clarity Act is released, I think we'll see massive buying power from these institutions, truly from the US. So far they haven't really started yet because there's no clarity. Yeah.
So I'm from the UK. How's the UK standing up in this? Because I did speak to a former UK politician, and he said, well, we were holding back a little bit to see how it plays out in other jurisdictions, and then we may then take the best of the rest, and then make some sort of like competitive, compelling reason for inward investment in the UK. Can you explain any kind of dealings you've had with the UK regulators?
Yeah, I'm actually going there next week after this trip. We were invited by the Economic Development Board, basically welcoming business there. One thing for sure, UK is very aggressive on trying to invite business to the UK now. And then we're going to talk to FCA. I think FCA approach previously was quite defensive. it was quite hard for crypto companies to get the license and even use the license to do much. But what I'm hearing is that they're changing the stance dramatically. And I think still for a lot of the clients, FCA stands on a very high level of reputation, and that's the same for CFD, for TradFi licenses. So I mean, for us, we would love to. And UK is really an institution-based country, so I think that would be interesting. So that's why I'm going there, and I hope to get more update as well. Yeah.
Well, yes, I've been at a few different events over the years in London, and you've seen how they've developed over the years from being maybe like on the whole your crypto bros, but now you've got like a lot of the institutional people are coming in, and you can see them kind of not co-opting the space, but getting more and more involved in the space. But there's one thing, you've spoken to lots of different regulatory bodies across the globe. How are they going to try to regulate DeFi? Like regulating a centralized entity seems it's in a jurisdiction, but regulating that kind of like the spirit of DeFi, where it's kind of like supranational. It's not anchored to any particular place in the globe. A lot of it's anonymous. Have you spoken to any of them about that? What do you think are the challenges there?
Yeah, we definitely spoke to EU regulators. I think for them the whole decentralized DeFi world is not on their agenda yet. I think with Mika is the fiat to crypto part, and the crypto to crypto. MiFID is the derivative of crypto. Even for on-chain earn, it's not really allowed here as a regulated body in EU. And that would, if the Mika EU is like this, most of part of the other world, we haven't seen even definition on DeFi. But I think gradually it will come to that area because you start to see a lot of the projects are claiming to be DeFi, but they're not DeFi. So there's still room to arbitrage for regulation on that front. But I think gradually it's like how exchanges back in 2018, none of them were KYC'd, with BitMax and all of that. I think DeFi is having that period of honeymoon, but soon once the regulators figure it out, they will get to DeFi and probably have clear definition on what classifies a DeFi protocol. I mean, if you only have 3 node or 5 node and then centralized offices, and then like, is that a DeFi? Is that not a DeFi, right? Or are you just arbitraging that? So yeah, I think first area they will get to is probably the DEXs. Same as, because that's where all the trading happens. Because there are a lot of regulatory concern there. If you're not doing KYC, you allow everyone. Is there a mixed flow on sanctioned countries? How do you identify the clients? I mean, we've been held as banking grade regulator. We got to check every single deposit. We got to check all the KYCs, do EDDs, and all of that. So exchanges are now being held like banks, especially in the EU. But DEXs, you can just get on and do whatever you want, right? So, but I think it will get there, but it will take some time. Yeah.
That is interesting. So DeFi, like the centralized exchanges, there was a time when they were in the Wild West and they had their honeymoon period. DeFi's kind of in their honeymoon period, like we'll pull those guys in. Where's the next Wild West? Is that like agentic payments and things like that? Do you think that's the next?
No, I don't think AI on the agentic payment part changes. I think it relies on the existing infrastructure. It's just a tool, I think. For example, Bybit internally, we embrace AI massively. Even the teams, they set their OKR or their quarterly goal to say how much AI they want to use. And I always tell the team, look, AI is only the mean to the end. I wouldn't require you to use Excel when Excel first came out to be part of the goal, right? So, but agentic payment, I think, is a big topic. Like for Bybit, we actually released the AI agent account for a client to use. They can create a sub account for the AI to interact and do even tradings and things like that. So far, we haven't seen massive trading coming out of that. But we do see a lot of clients connect their claw or whatever to our API to fetch data, price data, to do analytic things. But haven't seen so much trading conversion happening yet. Right.
Okay, well, that's time, folks, actually. Can you put your hands together and a round of applause, please, for Ben?
Thank you.
Welcome to Signal Week.